Yo, what's good, guys? So, hope you guys had a great trading week so far. It's been pretty volatile, lots of crazy moves. Hope you guys got some nice pips. And today, we're going to be talking about how to draw support and resistance levels, or how I like to draw them. And a few guys have been asking me how I do that, so I decided to make this video. Hope you guys learned something, hope it's valuable, and let's get right into it. Yo, what's good, guys? So here is the chart for Euro JPY, which is the yen. So well, let me start off getting rid of these moving averages. We're not going to need those for what we're doing today. So obviously the topic of this video is support and resistance, which I also like to call key levels. It means the same thing. It's basically just an area where price will bounce or react to, either in a positive way, going up, or a negative way, going down, if that's how you want to look at it. Basically, price reacts to this level or zone, on a somewhat consistent basis, right? If it doesn't once, that doesn't mean it's an area of support or resistance, right? I'll get into that a little further, but just as a general guideline, that's what support and resistance is, which again, I also call key level sometimes. It's interchangeable, it means the same thing. Next thing I wanted to touch on is I get asked how I draw my key levels or support and resistance, and sometimes it's kind of hard to answer because it really depends on your strategy and how you trade, because it will vary. If you're a scalper, it's going to be different how you draw your support and resistance than if you're a swing trader, right? And I'll elaborate on that. Let's just get into it right now. So if you're a scalper, this is how I recommend you draw your key levels or support and resistance, however you would like to call it, right? So let's just go down to a 5-minute chart here, right? I don't recommend using a zone if you're a scalper, right? Because let's say you draw a zone like this or something. It's kind of hard to scalp that a little bit, right? It's messy. Let's say price is right here. What do you do? I don't know. Yeah, so I don't recommend, if you're a scalper, using a zone, right? Lines work nice. I recommend using just a line or a small tiny zone, because that will help your accuracy, that will help you actually find trades. And yeah, of course it depends on your strategy, but yeah. So let's get into it, right? Here you can see you have this nice level of resistance, turn support. It was resistance there. Going back, it was support, whatever that is. Support, resistance. Going even further back, further back, it's only like, a few days. But so I recommend using lines, right? You can short it right there. You can buy it right there. This isn't a strategy, by the way. I'm just saying, if that's how you guys trade, this is how I recommend drawing them. And you can see here, price bounced off of this level. And why I recommend lines instead of zones is when you're on such short time frames, price reacts almost exactly. I'm not going to say exactly, because we all know, hopefully, as traders, nothing is exact, but it's pretty accurate, down to a few pips, right? So there's really no reason to draw a zone, right? And then you can do this top one here. Boom. There's no really reason to draw a zone, because you're trading on such a short time frame. And then I'm sure someone's going to say, oh, but, I have trouble finding these areas, right? Like, I just can't see them. It's hard to identify it. Well, this one should have been fairly obvious, but I get some of them. Sometimes it's not. Sometimes it's kind of hard to see, right? Because you put it there and you're like, oh, price doesn't really interact with it. We'll bring it a little lower and you'll see that's pretty much a good area. Right? Boom, boom, boom. kind of boom. Yeah. So, and then another way I recommend to do it, if you have trouble, just test. Like, place it different places and see if it matches up with multiple points. Like, it doesn't cost you guys anything to place trend lines or to place levels, and then if it doesn't work, you can just delete it, right? Like, TradingView is not charging you 10 cents for every object you put on your chart. It's all free. Well, unless you're paying monthly, whatever. But for the most part, it doesn't cost you anything. Like, let's say we just put it there. That's not really a good level. So what do? You just, okay, that didn't work. Let's try it there. Oh, okay. Okay. Wow, look at that. That's a level. Let's keep it there, right? Price interacted with it quite a bit. Like, there's no secret. And of course, with time, you get better at identifying it, and just how people are. How people are. You know, some people are better at pattern recognition than others. It doesn't mean you can't be a trader. It doesn't mean you can't draw support and resistance. It just means you're going to take a little bit more time to try out different levels and find the ones that work. I mean, it's just testing, and that's about it. Like, let's see, maybe this might be a level. Let's see. Maybe. We'll keep it. It interacted with it a few times. Yeah, like, look at this. Boom. Nice and beautiful. We tested out a few, found some that worked. Yeah. So for scalpers, that's how I would say to do it. Moving on to some higher time frames. And I know a lot of the people that are going to be watching this are not really scalpers. They're more swing traders, day traders, not really position traders, but swing traders mostly. So let's get into that. So if you're a swing trader, it's gonna be interesting. This part's gonna be interesting. So how I recommend getting the most accurate key level, support, resistance, whatever you'd like to call it, is to catch the top range of liquidity and the bottom range of liquidity for an area of support and resistance, and then putting a line to sort of catch the exact point of that area. That might sound like, what is he talking about? It's all good. I'll show you right now. So basically, like I talked about earlier, why support and resistance are there, why they exist, is because they're levels of, it's a place where there's a lot of liquidity, right? And of course, big traders need liquidity to enter into the market, to trade the size that they want to trade. Or sometimes it's not even traders. There's big companies that hire brokers to, exchange their currencies because they have a deal or they want to buy something. Obviously, they're going to want to get in where there's a lot of liquidity. So they will also be putting in positions. So it's not necessarily all traders in this market. However, they can still utilize these levels of liquidity. Basically, it's not an exact place. On a higher time frame, it's not an exact place where the liquidity is at, right? It's not at a specific number. Oh, there's a ton of liquidity at 121.5. Not quite, right? So basically what I do is I try to find the top range of, so first I identify an area where there seems to be constipation. Let's just put it like that. Right? And this seems to be an area. You can use your crosshairs, right? Your horizontal one, and just, move it and see, okay, this seems to be like an area where price interacts with, right? So then we look further and we play around with it, just like I talked about earlier, you play around with it and you find a top range. Okay, there seems to be a point in a small area where price rejects. So we'll start off our zone with that top range of liquidity. And then we try to find the bottom range, right? So the bottom range where price doesn't interact with this area anymore, if that makes sense. And it might be kind of a large range, like right here. This looks to be the bottom, right? right here seems to be the bottom of this range where price interacts with it. Let's extend this out further and see if we're right. For the most part, we're pretty on point, besides like here. But yeah, so this is the area or the zone that I would draw, right? We caught the top level liquidity and the bottom level because this whole range has the liquidity. As I said, it's not a point, it's a range. So price, boom, interacted with it, interacted with it, interacted with it, interacted with it. Boom, 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 boom. And if you zoom in, you can see even smaller places, right? So that's the top range, the bottom range. Boom, boom. And it's almost exact. It's almost exactly on this area. Boom, boom. And then, you know, when it's in the middle, it usually moves. It doesn't stay there for too long, right? It likes to move out of this area because there's a lot of buyers and sellers, and one of them is going to win, and it's going to push price either, you know, up or down, but it doesn't want to stay in that area of liquidity for too long, right? And that's why support and resistance works. That's why people trade it. You know, some people just trade zones, and that, you know, that works. So so that's how I draw the zone part of it, right? Because on a higher time frame, it's not a specific point, right? And if you're swing trading, you have some wiggle room, right? Your stop isn't going to be 5 pips, I would hope. So, you know, getting zones is fine if you're swing trading. And then the next thing I do to really increase the accuracy of my zones is to place sort of a mean or an average line, I guess I would call it. And that line usually has price bouncing off that exact point. So let me show you what I mean. It's usually in the middle, but sometimes it's slightly above, slightly below the middle. Like here, it would be around there, right? Price interacted with this point almost exactly multiple times. Right there, right there, right there, kind of right there, right there, right there, right there, right there, right there. You see that little wick? Right there. So this is sort of the mean of this range, right? And it just makes it a little easier to trade. If price is rejecting off of that, you could take the trade. As opposed to something like if you didn't have that, let's say, and you know, price was sort of in between, you would be a little confused as to whether you would want to short right there, short in the middle, short at the top if you thought this was going down. But you know, having that sort of mean line, having that sort of mean gives you an idea, right? If price rejects off of it, it's usually going to continue going down, or if price bounces off of it, it usually means it's going to continue going up. And so that's how you get the zone, you get the area where price is going to react, and then you have that line to sort of help guide you through it, if that makes sense. I find that this gives me the most accurate representation of what's going on at that level and in the market. Yeah, so I hope this is new to you. If it's not, well, you know, I apologize for wasting your time. So yeah, this is how I would do it if I'm a swing trader or a day trader. You know, you can catch the moves off of this. So, or a position trader, right? This would work if you're a position trader too. So let's go off. Usually position traders, if you don't know, first of all, what a position trader is, they trade, instead of a swing trader, which is days to weeks, maybe months, they're more months to years, right? So they're not trying to, they don't have small stops, they have wide stops, they're trading, you know, big size. They want to catch, they're obviously, if they're using fundamentals, they're using, you know, they're not looking at one single central bank decision. They're looking at multiple. They're looking at bigger things that usually swing traders don't look at, like how the credit looks, you know, defaults, company debt, stuff like that, which is a lot more than we need to get into when we're looking at support and resistance. So let's get rid of everything. Usually you're going to look at the weekly time frame, and it's no different. Like starting from the hour and up, I wouldn't draw my support and resistance any different than I just showed you, right? Get the range of liquidity. the top range and the bottom range, and then find a mean point to put your line. And I find that that gives you a pretty accurate, representation. So we're on the weekly, and let's just do what I talked about, right? We just go down, try to find an area that has some congestion. So let's keep going, and it looks like this area here has a lot of price reaction. So let's see if we can find something here, right? Because, all you can do is test and see. Looks like there's a point here which price reacted to twice. Maybe we can use that for the top range. Let's see. Let's just start it off there. And then keep going until we find the bottom range. Looks like something like that works, right? We see price reacts off this bottom range and then also, reacts the other way, because that will show you that there is actually liquidity there, right? If price rejects, right here, there's a lot of liquidity. That's the bottom range right there. And then the top range, we can see boom, boom, sort of reacted the other way. We might be able to extend this out even further, actually. Let's see. Yep, the top range works. Boom, 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 boom. So, and this is spanning years, guys. This is from 2003 up until the last time it touched, which was 2 years ago. So, I mean, it's pretty accurate, guys. And then if we're looking for the mean, let's call it the mean, this point seems to be pretty good. Maybe actually, well, back then, but not so much recently, and with trading recently. So let's try to find a point that works more recent. I would say this area works a little better. Well, back then it worked too, but recently we've seen right there, exact. When you're doing your mean line, you want to look for exact, almost to the, couple pips reaction off of it. We sort of saw that here. We definitely saw that there. Definitely saw that there, right there. And, it helps look at the wicks. You can tell by the wicks. You can see wicked off of there, wicked off of there, wicked off of there. Going further back, wick. And it's not exact. Like, that's fine, right? Like, it's a few pips. It's fine. Well, okay, it's a weekly, so it might be a little more than a few pips. But you get what I'm saying. It has to be fairly exact, but not exact, if you know what I mean. So yeah, guys, I hope you gain something from this. Like I said, the most accurate way that I found to draw it is to catch both the top and bottom ranges of liquidity, and then do your mean line there, which again, like I said, will help you navigate in how you trade this, how you approach it. Because one drawback, I will say, one drawback with zones like this, sometimes when price is in the middle, you don't really know what to do, right? Like, let's say it's right here. Well, do I buy it, right, because it came back on support, or do I sell it because it might be getting rejected? These lines, I would say help you guide that, because price will usually react on it. Like right here, boom, nice place to sell, right? Right here, nice place to buy. It was getting rejected there off of it, so it's not perfect, but I found that this works very nice. Another thing I wanted to touch on, again, this is depending on your strategy, your time frame you're trading, is the higher the time frame, usually the bigger the area of liquidity is going to be. And again, like, you might want to draw this if you're a swing trader. However, this range, since it's on a weekly, is almost 500 pips, right? 470 pips. It's kind of hard to trade that if you're a swing trader, right? Like, what do you do if it's in the middle? It's like 200 pips to break above, 200 pips to break below. It's you don't know what to do. So yeah, I would recommend this more for position traders or swing traders every once in a while. Okay, let's see, price is right there. It helps you get an idea of what might happen. But then, I wouldn't probably keep it on your chart, because let's say you're a swing trader, price is right there. For the most part, if you're on an hourly chart, everything's going to be all yellow because it's all inside the zone. And I don't think any of you guys want that. So yeah. Um, I would, if I was a swing trader, I would mostly draw it on the 4 hour, maybe 2 hour, maybe 1 hour. Daily, maybe, but mostly 4 hour. 4 hour gives you a good indication. Like we drew earlier, that sort of zone we drew, that was on the 4 hour chart. And as you see, there's a lot of good trading opportunities just by drawing that you know that zone and then that mean line. A lot of good opportunities just trading that. And I don't recommend just trading off of technicals. They're powerful, they work, obviously, but having a fundamental idea and a fundamental picture before just gives you that extra confidence. Not to mention the market will, more likely than not, move in the direction of the fundamentals. So, if you combine zones with fundamentals, that's a strategy right there. I mean, you don't even need trend lines if you want to go about that way. So there's lots of ways to trade. This is just one tool that can help. And yeah, basically, this is how I draw it. You can draw like this or not. Another thing I would also recommend, maybe if you're more of a visual person, you can even just mark off the high. Oh my God, the high range and the low range of liquidity. Boom. Right. And if you don't like the zone part, you can mark off zones with the lines and the mean with a line, and you don't even need to have that color or rectangle or whatever, and you can just do it like that, right? This is all one zone, and you can even do it by colors. I mean, there's so many ways you can go about it, right? But the general idea is catch the bottom range and the top range of liquidity, because like I said, it's not a specific point, and then draw the mean line where price likes to react pretty much on the dot, and that'll give you a pretty good idea of what's going to happen. So hope you guys learned from this. Hope you guys enjoyed. I'm not quite sure how long it is, but not all my videos are going to be super long. Recently, I know they have been, but it might be 5-10 minutes just talking about some little tip I have. Like I said, still trying to go for once a week. I probably will try to post another video either tomorrow or this weekend, so stay tuned for that. Hope you guys got some value out of this video. I hope this really helps your trading. If you learned something, let me know. I love hearing that I could help. And also, if you learned something, please give me a subscribe, because there'll be a lot more content like this coming. And if you liked it, give it a like. That helps push it out to other traders, and possibly, hopefully, help them as well. And another thing, just want to give a big thank you to those who liked my first YouTube video. 13 of you guys, thank you. And all of you guys that subscribed, I also very much appreciate that. So hope you enjoyed. Have a great rest of your trading week. There's only one day left. Make the most of it, and enjoy the weekend. I will be talking to you guys shortly. See ya.